Hey guys, I just want to go over some the currency markets in front of I don't know if Yellen's going to be a non-event tomorrow or not, but you can just look at a few things. Um, I wanted to mention I like to use a standard two standard deviation regression channel, and I've used it for a long time. I used it a lot on the Treasury desk, and uh, the reason being is this chart here shows this is called the 3 sigma rule, and in statistics. What they found is that within one standard deviation, right? So this middle line is the mean. One standard deviation out on both sides is typically where you'll find 68% of the data. Okay, and then within 2 standard deviations, 95% of the data will lie within 2 standard deviations of the mean, typically. And then at 3 standard deviations, you almost have the entire sample um, um, falls under that distribution. So that's kind of you can apply it to markets also. So most of the time, 95% of the price action will stay within 2 standard deviations. All right, and of course, price can go beyond 2 standard deviations. I mean, I've seen moves when we had the flash crash. I think the 30-year or maybe even the 10-year moved 6 standard deviations. So, but the way you use that, and this is a regression channel I drew here, the way you use it is price has a hard time staying outside of 2 standard deviations for any lengthy period of time. So what tends to happen is you either have to have a move sideways and consolidate over time. Usually a market will have to rest and let the moving averages catch up, or it simply has to mean revert. So I like to use a standard deviation regression channel when I'm trying to project the trend forward, and that also helps with timing, but it also helps with areas where you want to be. It helps you determine the edge or where the probabilities lie of where a market might hold. So I just ran this regression channel that was for most of last year and this year, and you can see, um, if you started drawing it from the highs here, and then after we made these lows, and say the market was right around here, drawing the channel sideways between this high and this high forward actually gave you the highs here um, last year and this year. Okay, and then did the same thing we held in May. All right, and now this is the more intermediate term channel. So all the price action from the lows of May, if you draw that channel, uh, it picks up on all the price action. It'll draw the mean, and then this is 2 standard deviations. So if we zoom in, this is the dollar, by the way. This is not the dollar index. This is a proprietary formula that one of my guys came up with, and you can see that we're kind of right at the bottom of the channel right now. So this is a kind of an area I want to see hold. If we can't hold it, then we probably go back to the May lows. That we've been talking about quite a bit, both in the videos and in the room. All right, and then I did it for some other currency pairs. So what I went ahead and do is I call these the global currency trends. And what I did is I took 8, the G8 or G10 currency pairs, and I combined them all and then divided by the number of pairs. So there's usually 8 to 10 pairs here. So this is New Zealand dollar, across all the major currencies. So this is the trend currently for New Zealand dollar, which is down. You can see that in the regression channel. So when you get outside of it, that shows you you're oversold. It shows you where the right risk reward is. But this channel has done a good job defining the tops. All right. So nothing's perfect, but it gives you an idea of the range. And I use these regression channels to come up with my risk ranges too. So if I want to know what the range is for the day, I'll draw one of these over the trend. If I want to do an intermediate term risk range, I'll draw it over the hourly or 4-hour trend, and that gives you a good range. That's how I do my ranges anyway. So then this is the Aussie. Trend's been pretty significantly down there as well, but you can see you're getting pretty oversold every time you get to the bottom of this channel. I mean, it's done a great job. So this is why I use the regression channel a lot, 2 standard deviations. It just tends to capture, again, the majority of the price action, and that's true in that 3 sigma rule that they've found in statistics as well. And then you have the pound here, bearish. Alright, so you can see this is the global, again, this is the global pound, so this is a very steep decline, right? And look how far away we are from the top of the bands. I mean, this is just nasty. So the Brexit lows, though, is boom, 2 standard deviations, and you can see how it did well. So you want to cover into the lower part of the range, right? And you obviously want to be thinking sell back at the top of the range. So if I were to give you a big, these numbers don't mean anything to anyone because everybody follows obviously pound versus the dollar or pound versus the euro or the yen. So these numbers don't mean anything, but to most people. But I would say give 17 to minus 20. That's your new range. So we'll keep monitoring these. It's the same thing. The yen is bullish. All right. You can see how strong the yen's been. That's pretty clear. And again, if we zoom in, look how this is just picking off the higher lows. It works fantastic. You wanted to be getting out of your longs there in yen. Same thing up here. So we'll see. This is projecting forward in time. Maybe we get another move to higher highs here. I think that's definitely possible. And then you wanted to be a buyer back here in July, which we were. All right, here's the won. It's done a nice job there too. So you can see that trend's been bearish there. And then the same on the euro, very bearish. But we're getting to levels where this was pretty oversold. This was almost 3 standard deviations down here. Anyway, guys, I hope that helps. I was just playing around with that this evening, and I'll talk to you guys in the morning.